just our realization that tariffs are probably here to stay and it's a change of the structure of markets, but maybe it doesn't matter over the longer run, that this is a short-term shock. I have been very bullish into this, thinking that this low that we're seeing in markets right now is really a big opportunity. And Andreas is coming round to that as well. So we've got a bit of a timing gap still, which is great to know. So you guys can see, okay, Raoul's bullish now, Andreas, give it another week, give it another month, that kind of thing. I think it's bottomed, but we'll see. But it's in this window. It's in this very short window between now and 2 weeks. It's the last chance saloon, I think. And I think you've been given a gift in a lot of this stuff, because if we're both right that liquidity will accelerate, the forward-looking stuff is already lots of liquidity coming or will affect asset classes. But if it keeps going, then we got to, this was the last big dip to get to leverage into.
Global trade tension sparked by U.S. President Donald Trump's sweeping tariff measures could end with a potential deal with China, as investors remain concerned about escalating tensions on both sides. Trump's announcement of reciprocal tariffs on imports on April 2nd sent shockwaves through global stock and cryptocurrency markets. These measures include a basic 10% tariff on all imported goods, effective April 5th, and higher levies, such as a 34% tariff on Chinese imports, effective April 9th. However, tariff negotiations could be just a gesture to get the United States to reach an agreement with China, according to Raoul Pal, founder and CEO of Global Macro Investor. Mr. Paul wrote that this is the main issue and that both China and the United States understand and need it. Everything else is just a negotiating game. China needs a weaker dollar, and the United States needs tariffs. Furthermore, the United States is attempting to end Chinese tariff arbitrage through other channels, such as Mexico or Vietnam. Given China's recent retaliatory measures, a solution is unlikely in the short term. In response to the U.S. tariffs, China imposed 34% tariffs on all U.S. imports starting April 10th. The Xinhua news agency reported on April 4th. China surpassed the United States in 2012 to become the world's largest trading nation in terms of the total value of exports and imports, surpassing $4 trillion in goods trade that year. As the trade dispute continues to unfold, analysts believe a potential agreement between the two global superpowers could serve as a key catalyst for a recovery in digital asset markets. According to Raoul Pal, Solana and crypto market might hit a new high in the next 2 weeks. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
The humanistic things, whether it's music, that can be done by AI, but to be live on tour can't be. To be at a restaurant is valuable. To be on holiday is valuable. To be at a live event where you're meeting other people is valuable. To be communicating with people and just being a human, whatever that means. So I think that's where, and David Mattin talks a lot about this, is like, we're just going to have to lean into being human, because that's the only thing the AI can't be. The AI can't come into a room, give you a hug, say, how you doing? Let's have a drink. Whatever. It can't do that. And that's a very human thing. So I just think we do adapt over time. The question is where do the revenues come from for the state? How do you tax AI? How do you tax, because a lot of this can be just agents. How do you tax them? How do you tax the robots? How do you bring the income side in to pay the UBI on the other side? That's not sure. While GDP growth could be 10%. Because of the insaneness of the productivity boost that happens. So you're getting massive GDP accruing to whom? Not clear. And this is why I came up with this idea of the economic singularity, where it becomes so much of I don't know anymore that I just think I just don't want to be trying to make a living in 7 years' time. Structurally, because of your debasement thesis, liquidity thesis, you're going to be wanting to be long duration assets, crypto, tech, that kind of stuff as a general trade, I guess. Yeah, as a structural book.
But I prefer crypto to the Max 7s here, due to the discussions we had on IT infrastructure, security concerns from Europe and all of that. So if I should pick between the two, I would certainly lean towards crypto.
You don't tariff crypto.
No, how?
Exactly.
So I think that's a valid point here, that tariffs will impact Max 7 more than than crypto ultimately.
Paul noted an imminent surge in Bitcoin's value. Attributing the expected increase to increased global liquidity, he argued that Bitcoin's value evolution generally follows a 10-week global liquidity cycle. Paul presented a chart showing a significant increase in the global monetary aggregate, M2, which represents the world's money supply, after bottoming out in late 2024. Based on this information, he predicts that Bitcoin is about to exit its correction phase and begin new gains. Earlier this month, Paul predicted that the global monetary aggregate, M2, would continue its upward trajectory, while Bitcoin and other cryptocurrencies would experience a steady correction. He also speculated that Bitcoin could reach a market cycle peak of at least $210,000 with an upside potential for $412,000 or even $805,000. The cryptocurrency market is once again turning to altcoins. Raoul Pal, CEO of Real Vision, has suggested that the largest altcoin season in history could begin within 2 weeks, further fueling expectations. Despite the volatile Bitcoin price fluctuations that concern traders, Mr. Paul assures that this is a natural process observed in previous cycles before significant increases. He anticipates major turmoil in the cryptocurrency sector in the coming weeks and urges altcoin investors to remain vigilant. Bitcoin disappointed investors by recently failing to break above the $100,000 mark. The cryptocurrency peaked at $109,000 last month before correcting back to the support level of $94,200. Experts warn that consolidation could continue at this level. Paul directly links Bitcoin's fluctuations to the Federal Reserve's monetary policies. January CPI inflation data weakened expectations of interest rate cuts, and Fed Chairman Raoul Pal was cautious about cutting rates due to strong economic signals. However, Paul believes global liquidity will be the crucial factor and predicts significant increases in the Bitcoin and altcoin markets once liquidity increases. Calling this new phase of the cryptocurrency markets a banana zone, Paul anticipates rapid and substantial increases in altcoins. He advises investors to be patient, noting that altcoins will experience a parabolic rise as liquidity fully flows into the markets. He notes, however, that this process could take several weeks. Paul says Solana should outperform Ethereum in this cycle, but an altcoin could potentially do even better. According to Paul, a top 20 altcoin by market cap and a new entrant into the Layer 1 space is expected to outperform not only Solana and Ethereum, but also Bitcoin. According to him, Ethereum would start to outperform Bitcoin for the remainder of the cycle, but would underperform Solana, and Solana would underperform SUI, as SUI is in the peak performance adoption phase, which was proven early on. Paul says Ethereum's outperformance against Bitcoin will be partly due to the fact that the cryptocurrency cycle has entered a risk-on phase. The macro guru adds that the cryptocurrency sector should benefit from a more favorable regulatory environment following the election of Donald Trump as U.S. president. Now that cryptocurrency regulation is likely to improve significantly, the path is paved for 2 key potential developments. Decentralized finance utility tokens will begin to provide a yield or reward from the underlying protocol, creating value for the network. The majority of this value is in Ethereum. Traditional finance will likely begin to develop broader use cases, but on the most proven and adopted chain. Think of Ethereum as the Microsoft of Web3. No one gets fired for using it. These 2 factors alone can significantly revalue Ethereum and offset the current retail adoption on other chains. Ethereum yields will attract more institutions. They will also enable the creation of other financial products such as collateralized funds. With better regulation, this activity will explode.